Great. All right, I just retweeted it too, and yeah, hopefully next time we'll. It's my fault for starting a couple minutes late. Apologize, Matt.
That's all right.
And we talked yesterday about some things to talk about today in our live stream, and market today is seems like it's not doing so well with Tesla at least, but I had a great day yesterday, and some of the other growth stocks are kind of mixed, I feel like. So it's interesting. What's your feeling for what the markets are doing, I guess?
Yeah, it was pretty interesting. I was watching the numbers kind of pre-market this morning while I was getting ready, and everything was, green pretty significantly. I think Tesla was around, hit 392, something like that. Zoom was up, Square was up, everything was up. And then right at 8:30, you had the CPI print today, which came in at, plus 0.9% for June. I think it was for June, which was a lot higher than the expectation. So the consensus estimate was plus 0.5%. So I think that high kind of CPI print spooked markets quite a bit. Right at 8:30, in fact, 8:30 Eastern, you saw everything just kind of went red and significantly so. So I think that's kind of what spooked the market. But in looking at the data, there are some great resources out there of folks who dissect this a little further. So I was looking at some things Gary Black had tweeted out earlier today, and essentially, if you exclude some reopening items, so like travel, hotels, vehicles, that sort of thing, inflation on those. If you exclude those, then inflation in June was actually only 0.3%. So it's a huge part of this inflation is just how depressed everything was 1 year ago this time, and now that everything's reopening, of course, you're kind of seeing higher prices. So you and I, we've talked about inflation for a while. I was, at least convinced that it was there was a decent probability, I don't know, 10 to 20% that we could have some significant inflation. The more of these data points are coming in, it does seem. I think I was skeptical of the kind of transitory talking points that everyone talks about, but as we're seeing month after month kind of come in, and you've got these huge reopening kind of one-time items that are really driving these huge inflation numbers, it does seem to me that
like a trend.
It probably is a little bit more transitory than maybe some of the worst fears would suggest.
Yeah, I mean, I think that's certainly one view. My view is sort of that, if I look at the market overall, like it's just going to ebb and flow. It's the summer. We look to put stories or narratives to every kind of movement in the morning, and there's these numbers that come out historically, sometimes have moved the market, and it's possible. And I know a lot of people, follow these numbers and metrics, so maybe it's, self-fulfilling to some degree. But just such a big, the macro market, it's so big and complex in some ways, yet so simple in other ways, and how it just kind of ebbs and flows naturally, and I just feel like it's kind of sort of its natural up and down sideways movement we're in the middle of, and that's why I like working with you, Matt, because you kind of like go into like these things and these, not that some of them are definitely true and I ignore them a lot of times as noise, but sometimes there's a lot of signal amongst that noise and I kind of miss that. So it's good to have you on the team with us to like go over this stuff, and help.
It just
help
can't
me stay
help
aware of
it. I'm a huge kind of nerd when it comes to this sort of stuff. So
I mean, so many people are, and it's good to be. And I used to be many years ago, and it just had never served me right with my personal trading. So I kind of a long time ago. I don't know if I ever was as into it as you are now, obviously. Or most people are. I never was an expert in any way, shape, or form, but I would follow stuff like that. But
yeah, I certainly don't think I'm an expert, but I like, one of the things that I really enjoy doing is it's kind of taking some sort of thesis. We were talking about this with MicroStrategy actually yesterday, which maybe we can get into in a little bit, but MicroStrategy kind of moves in conjunction with Bitcoin, and it seemed to me just from kind of watching both those prices that they've kind of gotten out of sync lately. So I just took some time, ran some numbers, and lo and behold, the kind of thesis, which, you know, it's you put I think a lot of theses out there. But if you actually dig into the numbers with that one, you could kind of see this, you know, where it got, MicroStrategy got a little bit inflated relative to Bitcoin and kind of its core Bitcoin holdings. So yeah, I do think it's fun to kind of run some numbers and dig into that, but it's certainly not everyone's cup of tea. And the hard thing to do, even if you do that, you know, you got to then make the right trade to kind of take advantage of it, and that's very hard to do. And a lot of times, even if your thesis is right, the market may not move in the way that you expect, and that's something I've seen time and again with Tesla in particular. I mean, where they would have blowout earnings last year in particular, kind of quarter after quarter, and you see it just like dive right after the huge earnings beat. So it's hard. You can't, even if you're right,
it's so hard.
You got to trade around it in a smart way.
Yeah, I mean, I luckily was right on the COVID crash, you know, the second time, you know, I was persistent on that. But before that, I remember, you know, I don't often like try to trade on the macro market with like a big hedge or something. But I remember like a couple of years ago, maybe it was 3 or 4 years ago even, there was like a big government shutdown looming in the fall, and Tesla was really, you know, all the growth in tech stocks and the whole market was kind of jittery. And I bought a whole bunch of, maybe it was like 5 or 6 years ago even. And I bought a whole bunch of Tesla puts, like nervous that this government shutdown. You know, I was listening to all the talking heads on Bloomberg and CNBC, you know, talking up the fear on index. They're not going to come to a government deal. No one's going to pay. The government's going to shut down. The world's going to end. And I was like, holy crap! And I just like got into my head, and I was like, I'm going to buy a bunch of Tesla puts because that was most of my portfolio. That you know, then it still is. And you know, those puts were, you know, I spent like 10% of my portfolio on puts because I was like so sure of listening, and it turned into nothing. And I was like, oh man, I'm never doing that again. And so it was like, you know, maybe it was like 5 or 7% of my portfolio, not 10%, but still it was meaningful where I was like, wow, that kind of hurt. I shouldn't have bought those puts. And then there was like the election risk. I remember of this past election with Trump and Biden, and you know, I thought that was just like, there was a lot of fear mongering, but leading up to that, like, oh, the volatility of the market. And I just felt like the market overpriced it in, and I just didn't take any action of any sort. And I'm glad I didn't, because 5 years ago, I probably would have bought puts or something if that was me again, you know. So it's hard to, like, you know, we learn from our past, but you know, you never know when it's really signal versus noise, you know. It's hard to know. But
yeah, it is, and the markets themselves can't seem to make up their minds half the time. I mean, I remember watching, you know, the markets when it looked like Trump was gonna kind of upset Biden, and they like just rallied hard, and then like for a very short amount of time, and then when it became clear that Biden was going to win, I think there was like a short slump, and then it got right back to the level where it had been before. So it's like, oh, maybe you know, Trump is going to be great for the markets, and then Biden comes in and it's like, well, also Biden's going to be great. So
like, Also, when Trump beat Hillary, that was like so unexpected. Everyone thought that was going to be terrible for the markets, and it rallied for a while after that too. So you just never know. Like we think we can speculate. That's all we can do, and whether we put our money on the speculation or not is another decision. But just, you know, it's normal to speculate and try to make sense of things, obviously. So. Yeah, it's fun to talk about the I think we should try to talk about the macro market environment a little bit at the start of every chat, maybe, if everyone's okay, and then move on to other stuff.
Yeah. I think we'll probably do that. I think the big news, everyone, at least in the Tesla community, is talking about right now is the beta version 9 going out to all the testers. What's your kind of initial take on all the videos we've been seeing from that?
Yeah, I mean, I put a tweet out, like I binge watched it a lot, and it was popular. You know, some tweets I put out are not very popular. Usually, if it's not Tesla related, but anything Tesla related is usually very popular. And this particular one was, and I think a lot of people identify with it. That's why a lot of people that follow me, and you know, we're all super curious, and so much buildup. You know, it's like a season premiere of a TV show we've all been waiting for. You know?
They kept getting pushed back. You know,
kept getting pushed back. Oh, it's not ready yet. And we're like, oh, come on, 2 more weeks. All right, 2 more weeks. You know, and so they finally put it out there, and I watched a whole bunch, and it's interesting. I mean, I'm very impressed that they have like sort of a whole new foundation to start with in a way. I don't know if they're building off a lot of old code. I mean, I'm sure there's some ancillary code or whatever development that they have built on top, but in some ways, it's sort of like a new foundation with vision only in terms of how they progress forward from here, at least, right?
Yeah.
And I've listened to people talk about it. I touched base with Dave a little bit and James Duma a little bit, and try to touch base with some other people that got the early. I don't have the full self-driving version 9 myself, and I know you don't either, but we're both eager to try it. Mm-hmm. And the best we can do, as most people, is just watch the videos and stuff. But yeah, I mean, it's not ready for prime time, of course, but it's not clear to me how far off it is. We'll know more in 2 or 3 weeks, hopefully, when they have a newer version release. Hopefully from this point, now that they have this new foundation of vision only, every few weeks they'll have an upgraded version to push out to everyone, now that's kind of a new stack to build from. I mean, what are your initial thoughts on it?
Yeah, I think somewhat similar. The reason I watch it so carefully is because, I think we're talking about this a little bit last week too, that if it becomes clear that Tesla is on kind of knocking on the door of level 4 and level 5 autonomy, I mean, there's huge kind of share price implications for that. So that's something that, when it happens, is going to be really important, especially if you're taking kind of a short-term or medium-term approach using options, as we do at Good Soil. Getting the timing of that right kind of before the rest of the market picks it up is going to be really important. So, what I saw when I was doing my own binge watching was the behavior seemed, I would say, generally better than the previous versions that we'd seen. But given kind of the months delays that were kind of in between those iterations, it wasn't sort of drastically better. And so I saw a lot of commenters kind of saying similar things. There was even a Wall Street analyst who basically said, "Oh, this is, nothing new under the sun. Basically, this is not any better than what was out there previously." So I think you need to be kind of realistic about what it is, but at the same time, as you were saying, I mean, this is an entire rewrite essentially. I mean, they're using vision only, so they're getting rid of a lot of the tasks that had been kind of managed by radar before. The thing that's been really impressive to me is how accurately it's rendering, multiple cars. So in the public build that's out right now, there's never more than like 2, 3, 4 cars visualized on the screen. And so I'm like, is it just not picking those up? But on this new build, there's somebody posted a picture, I think, that had like 26 cars in one shot. Yeah. It was so things like that are just really impressive. So I think that the thing to watch from now on is kind of what is that pace of improvement. It was really fun watching the pace of improvement on like highway driving a couple of years ago, because that happened really fast, where it went from like pretty awful and not that safe to nearly flawless. I think should be kind of knocking on the door of something similar sort of pace right now.
Yeah, it's going to be all about the next few months. It might be a year before it's like really more ready for wide release, or it might be 6 months or 3 months even. I don't know, but the next 1 or 2 months will be very revealing to us about when we binge watch the next versions released, and the differences. Because I think the difference is, I can't quite tell. Like, I know the left turns seem to be, especially the unprotected left turns, seem to be a real touch point for a lot of the people posting their videos. And in some cases,
Chuck Cook is big on that one. He has this one left turn in particular that he keeps posting on.
That one,
the car ended up doing this like loop over and over again. It was supposed to turn left, but it just would chicken out and turn right in a viral loop. Anyway.
Yeah, I saw that too. Yeah. And some of the left turns, I saw some of his, and it seems clear that like it's not taking them, whether it's completely erroneous where it's going to get in an accident, or whether it's just doing it in a different way that humans are not comfortable with. I can't quite tell the difference, And so I just, because none of us want to take that chance. I wouldn't want to take that chance. Like, if it's making this left turn and it's like doing it at an awkward point with oncoming traffic coming very fast, and I'm not comfortable with how it's doing, I'll just take it over. I'm not going to like let it do its thing and risk my car's safety and my life potentially with a big crash, So I can see people taking it over, prematurely, potentially. or maybe the car really is about to get in an accident. The latter is harder for me to believe, but it's possible in some cases, maybe too. But I just kind of maybe before this live stream an hour ago, I was just going through my Twitter feed and I saw a clip from this at Tesla Save Lives. Really a good follow, and
that's
we
a
should get
great
them more
resource. Yeah.
Yeah, and we should try to promote them because they're really helping change the narrative of Tesla being the safest car, and that's probably one of the more important narratives we need to get out there. I just retweeted a clip they retweeted of, I think it was Silicon Valley Tesla Owner Club that's using it, and it's this 45-second clip of watching pedestrians cross in front. It's very accurate, but then the last 10 or 15 seconds, the car is able to creep up, and instead of a left turn, it's making a right turn, but there's like a weird construction zone, and it's making a sharp right turn like into the construction at first. And most of the people doing this would take over the Tesla at that point, like, well, I'm not doing that. But instead, the Silicon Valley Owners Club or whatever person who's posting this let the car do its thing, and the car slowly stopped in front of the construction and then inched forward and then made a correct right turn anyway.
Yeah.
So to me, that was like really revealing that like maybe the car does know what it's doing. We're just not used to how it's doing it. And it's weird for us. It doesn't mean that it shouldn't get addressed and shouldn't get fixed to be more like what we're used to. Mm-hmm. But I'm not 100% sure it's less safe than a human on those turns yet. It's better to be cautious though, and hopefully adjust the vision only decision making to be more in line with what humans typically do in terms of timing and how they corner the turn and all that stuff.
Yeah, absolutely. I try to be realistic when I'm looking at all this stuff. Because Chuck Cook, I brought him up earlier. He's had this opinion for a long time that the actual hardware is not really capable of true autonomy. And his main beef is that the camera in the B pillar is like a good foot behind his head. So on that left turn that we were talking about earlier, he's kind of leaning forward. His head was about 2 feet ahead of that B pillar. And so with this traffic rushing quickly kind of across this busy road, he had a better view than what he thinks the camera could have seen. And even then it was a hard turn for him. So, that's a very extreme case. And even then, maybe the right behavior is just to turn right and then do a U-turn, which the car didn't do in this case. But, if there is, let's just say for the sake of argument that there is kind of this gating issue where, if the traffic's going above a certain range and there's, not great visibility down the left side of the road, maybe you just have to slightly modify your route to, to go 2 minutes out of your way, and then that solves the problem. So, I don't think that there's anything structurally hindering Tesla's achievement of full autonomy, but it may be slightly different than the way humans drive, like you said. And so I'll just be kind of curious.
It's definitely going to be different than the way humans drive. But I guess part of the goal is to try to get it more in line with how we drive to make us more comfortable. And that's why the whole mind's eye thing is really good to help give us more comfort or understanding what the car sees. And I think the car clearly sees, much more than it's revealing on that screen there. It's just showing on the screen, what it's most definitive about, and what it sees is like worthy of us to view versus too much, background noise that we don't need to see or something. So, and that line, that line that like the neural network line is fascinating to me too, how that works. It's like predicting the future path and what's possible versus what's, and the line seems to be different from what the map is navigating you to. So it's interesting to see the differences there.
Yeah, it really is. And on that Tesla Owner Silicon Valley one in particular, you could kind of see the line going to that part of the road that was closed, and then it sort of figured out how to adjust that line. So it's really fascinating to watch that. But I do agree with you with your earlier point though, that just this visualization is so much better, and it's got to give you so much more confident as a driver. So yeah, I can't wait to test it out. I really hope it does go into wide release, in the next month, like Elon had suggested, but I have a feeling it might be a little bit longer than that.
Yeah. I was thinking about trying to really apply for it early, and, I was on the cusp of like, I should do it. I'm a big investor. And then I was like, well, if I get it, like, it's sort of it's for me, it's between like a burden and a responsibility, or a burden and a benefit. Like, once I start using it, I want to be responsible and report back, but also I don't want to be lazy using it, because I could see myself, the way I use autopilot now, if I start using it a little bit for the roads I know it works on well, I might get like complacent and be yelling at my kids in the back seat, or instead of paying attention to it, or use it. I probably should set a rule not to use it with my kids in the car, number one. But even if they're not in the car and I'm using it on a road I'm used to, and I've seen it do like the last 50 times perfectly, then I could see myself getting complacent and like, we're looking at a text message that just buzzed on my phone when I shouldn't, or something. And I'm just not, I don't know if I'm personally disciplined enough to be super responsible with it yet at this early stage. I mean, I think I could make myself, but it would just be like, okay, I really gotta. And I think I'll wait till one of the next releases and maybe push for it. But that's just me, my own self reflection on deciding how to pursue it.
Well, that does kind of makes sense though with why Tesla is not pushing this out to wide release. I mean, you can imagine if they did and just got people excited about, oh, Tesla's going to solve autonomy, pumping the stock like a lot of the Tesla Q says that Elon's trying to do. Then they've got, of course they would have an accident with the current build, or probably lots of them, and that would do a lot more harm to the long-term mission than good. So as
my logic doesn't and my logic doesn't make so much sense. It's sort of irrational, because I should just do it and test it out a few times and then just like pretend I don't have it after that, if this is what I think is going to happen. But I don't trust myself. Like, I think I'm just going to start relying on it, without being so disciplined to like turn it off and never use it again, but I would love to try it out for a few times. Maybe I could get it temporarily for like 3 weeks or something, and then have them turn it off for me. Or I don't know. It's just a lot of work to also reach out to them and get it all set up too.
And also, it's so much more fun to actually drive the car, and you've got the Plaid. I mean, I imagine you want to. It's not as exciting. I love it. You got autopilot turned on.
I know.
You find yourself just like hitting the accelerator.
I do.
More than
I do on like a highway. I find myself. It's scary, because when you hit that accelerator and it just bursts in acceleration on the highway, it's very like unusual how fast you accelerate into other people. So it's like more danger. Like normally when you're making a left change in lane, you have to look behind you and see who's creeping up on you. But this time, if you're going to use the accelerator, you're making a left, you really have to pay attention to the reverse. You got to look in front of you, make sure there's no one like 50 feet in front of you that you normally would be fine with. But with this acceleration, you might run into, so it's a little weird. Yeah, but I'm getting used to it.
Yeah. So I was looking through some of the questions and stuff we got on this when we posted this yesterday. People I think are always curious, is the time to buy leaps, or what kind of option plays are you interested in right now, Emmett? So what's the stuff that you find kind of most interesting in the current market right now?
Yeah, well, I think I was just looking, I mean, with Tesla, we're still kind of in that same like a large part of our portfolio and our fund is still in that same strategy of selling those deep in the money puts. It's kind of a slow and patient, boring, profitable trade so far, which is good, and I think it will continue to be. Selling those, we sold, I think, around $500 or something, those 1,000 strike June 2023 puts for Tesla. And now they're, I don't know, 450 or less or something like that, around there. So we're making money on that slowly as Tesla's kind of bouncing back and forth and time's eroding. And it's been a nice trade. And I think that's, to me, still the best risk reward out there, that type of trade. That's what we've done. I don't know for what it will, it's such, if Tesla goes down again, we'd sell maybe more or something of those puts or something. But right now it's hard to say if that's still a great trade. But that's what we did. And we still have
them
some
up in the high 500s, I think, right? For the most part.
When Tesla was in the 500s or low 600s. Yeah, but it was also more volatile, priced in at the time. Now that's kind of bounced back and forth in this range longer. It's some of the implied volatility is getting taken out of it and such. And yeah, it's trading on like 440 or something now. Yeah, so I wouldn't sell those now. I don't know. It's just, but yeah. What are you gonna say, Matt?
Yeah, I was just going to say, maybe for those who hadn't seen some of your earlier comments on those, that the idea is there is some potential for Tesla to kind of trade sideways or a little bit range bound, I think you'd thrown around maybe somewhere between 400 and 800 for the next couple of years, possibly. But there's also a very real possibility that Tesla could shoot upward, past 1,000, past the $1 trillion market cap. So given that it's not a slam dunk for Tesla to kind of, go up 50, 100% in the next couple of years, the idea is really, let's take a safe bet where your downside is limited by selling these $1,000 puts, collect over $500 of premium in doing so, or maybe it was right around $500 of premium to do so. And then if Tesla goes up, then you're collecting more money than you would if you had just held an equal amount of stock. So you're essentially getting 2 for 1 on every dollar that the stock goes up, at least at the time that we had traded within the fund. So you're getting kind of more access to the upside, but not as much on the downside.
Yeah, and you get less access to the, when we calculated the capital that we committed to sell those puts, it's not just the $500. You can't just sell them for free and collect the 500. You need to keep some capital on the side for the margin on top of that. And I think we thought it was like around $250 per contract or something. So it was like half or a third. It was between half and a third of what it costs for a full share of Tesla. So for every full share of Tesla or full 100 shares of Tesla, you could sell like 2 of these puts and collect a little extra, or keep a little extra cash on the side as well or something. And that's sort of how we looked at it. So for that amount of capital to commit to this trade, dollar for dollar, we've figured out that Tesla would sort of have to go above $2,000 per share based on how we were doing it,
right,
in order for us to make less money with this put trade than if we just held the shares, for example. So we just thought the probability, it's there, it's certainly there, but we just don't think it's probable that it'll be above $2,000 a share come June 2023. Maybe it's 50-50. I don't even know, but it doesn't seem like definitively probable to us. And so a lot has to go right with the full self-driving if that's going to happen. And that could happen, but there also could be a lot of delays or unforeseen delays, and the macro market might bounce around, keep, growth stocks and tech stocks lower for a while, or who knows. But, as long as Tesla ends above $1,000 a share, you max out your profit on this particular put trade. And if you held the stock, maybe you made 30 or 40%, but on this particular put trade, you can make 200% over 2 years, 67% per year for 2 years in a row or something is what we figured. So exactly. It seemed like a good risk reward to us.
One of the things we probably pay attention to more than maybe your average retail investor or a lot of other funds out there is delta dollars. So for every $1 delta or change in $1 of the underlying security, how many dollars is your portfolio exposed to? So with a trade like this, you can kind of leverage up that delta dollar exposure a little bit relative to just holding the stock. So that's something that we really liked in this case. And when Tesla shot up about $100 or so in the last month, we kind of saw that reflected in the portfolio as well. So it's been a really great strategy, I think, for us. And we do think that there's a real possibility that Tesla could shoot well past that, $1,000 mark. So we also have some kind of out of the money calls as well, but that's a much smaller, I would say, piece of our strategy right now.
Yeah, I would say so. But we're looking to, we're keeping a very close eye on every new episode of this new full self-driving season. And every episode is a big data point for us. And, as we see those data points, depending on where the stock price is, it's possible we decide to buy more long-term options or whatnot too. So we're keeping a close eye on how this develops. Yeah.
Yep. So let's look, what are some of the other questions we have coming in here? Emmet to the moon, that's a good point. So thoughts on genomics. I think that's one we probably don't have a whole lot of, opinion on. Some smart people I highly respect are super bullish on it. And frankly, it's kind of amazing to me the things that they can do, and kind of using, DNA as a almost like coding to kind of like store information. It's pretty phenomenal. So I don't know. I'm bullish on genomics, but I frankly just need to do my homework on them a little bit more to really understand them. What's your thought on that?
I mean, the concept and the theoretical capabilities, I'm super bullish on. I haven't studied enough to know the reality. I don't know anyone personally who's benefited from genomics yet. Maybe I do, and no one's brought it to my attention. I don't know, but I haven't researched testimonials of people directly. That's the type of stuff I'd want to do. Like the citizen journalism thing I'm talking about is like I would want to like really research ground level, like who are the people benefiting from this? Can I talk to them personally ever, or can I hear them being interviewed or whatever? I just don't have time to kind of get into that level of detail. Maybe I should make time, but when it comes to biology, I think in general, I've always thought that, or not always, but more recently, I've come to the conclusion that humans are a little, in general, are almost arrogant in thinking we can manipulate it as we do, and kind of nature is much more complicated to manipulate than we think. So I don't know if that carries over to genomics or not.
I have a feeling there's going to be some unintended consequences somewhere along the road.
I mean, it could be some unintended consequences or something. I don't know. Yeah, it's just I don't know. I don't know enough about it, to be honest.
Yeah, and it's not reason necessarily to say all genomics is bad. I don't think that at all. But it's getting so easy and so cheap to kind of alter DNA that you could have scenarios of like teenager in a basement, like just messing with DNA, and you get some different situation. It's
yeah.
I don't know. I think there will be, like any new technology, I think there's probably going to be goods and bads that come out of it.
Absolutely. Yeah. And I hope I'm completely just missing the boat and it turns out to be like incredible and what people are thinking. That would be great. It's not going to kill me not to have money in that investment success. Shame on me for not taking the time to research it if that happens, but I'm happy that it turned out to be good for people's health if that happens.
So did you hear about that Brookfield Tesla energy partnership thing, where they're essentially building new housing in outside of Austin somewhere?
I heard something about a roofing thing in it was Utah or somewhere, but Nevada or something. But I don't hear about what's the Brookfield thing.
I believe it's outside of Austin. I could be wrong. I haven't spent a whole lot of time digging into it, but essentially there's this property developer that's building new build houses outside of Austin, which badly needs it, frankly. And they're partnering with Tesla to install solar roof on all these homes. And I think that the thinking here, at least from Tesla's point of view, is that one of the huge pain points, and having had a solar roof yourself, I think you probably saw how long it took to get that process done. But you've got to remove the existing roof. You've got to kind of customize the installation process to every home out there. And that's just kind of a large expense. So you've got teams of people. How many people were working on your house when they were doing
my gosh, we had like one team that it was like the team focused on taking off the old roof and prepping it for next roof installation. That team was like 10 12 people or something, and then another team after they were done to install the new roof and hook it up, and then another team of like 2 guys that were really good that installed the power walls. That was like a separate division of Tesla, it seemed like. But both teams for the roof were each like 10 people or something like that. But each team was here for like two weeks or so. So it was like a month, 3 weeks or a month process. And, we're still actually waiting for PG&E to officially approve us turning it on. I think we've turned it on to some minimal degree so far, and willing to get like some slap on the wrist fine from PG&E if they find out. But we figured out a way to turn it on to some minimal degree in case our power goes out in the neighborhood or something like that. And
it's been a couple months. I didn't realize you were still waiting on PG&E. That's nuts.
Yeah,
utility interconnection process is going to be a huge headache with this.
Sure.
So,
and I think Brett Winton, he had something similar going on. He's in New York, and he mentioned something on Twitter once, and Elon replied back saying like, yeah, well, and I think a lot of people have this issue where they get the solar and the Powerwall put on, but it can take a couple months for the utility to like approve it or something.
Yeah, because there's this whole interconnection process, which it's frankly a legacy process from when actual new generating like big power plants would be added to the grid. You need to kind of do this interconnection study. So I've been part of a couple of these from my previous life, and it's an expensive process, and you have to make sure that the new power plant that you're adding doesn't disrupt the physical nature of the current grid, and that the local substations can handle it. So that you have this process managed by utilities and by grid operators to handle new interconnections like this, and there's nothing kind of small enough outside that process to handle small solar, a couple kilowatt solar installations. So with a lot of utilities, you've seen this huge kind of queue building up of requests for new interconnections that need to get approved. And utilities, frankly, it's outside their interest for you to have your own solar, because they lose demand when you do that. So there's no incentive for utilities to smooth this process or make it easier for you. So I think if they can kind of make it a headache for new customers, I think they're maybe silently hoping that it slows things down.
I don't know if they even intentionally, like, I don't know if it's as nefarious as them intentionally making it a headache, but I feel like it's just such a big bureaucratic, there's no incentive for them to fix the headaches that are naturally coming from this process they've designed, and I even have a close, or a friend, who works for PG&E, and he was telling me he works like in the metering area or something like that. And he recently had some like upgrade of a panel in his house. And for him, it even took months, and he tried calling, he couldn't get through it. And he works for PG&E. It's just such a big conglomerate business, and it's just like people get lost. There's no incentive by like the senior people that can make it effective, decision on this. There's no incentive for them to fix this process. If it works, even if it's really slow and convoluted, then that's fine, but there's nothing they're going to get more out of by making it better, so.
Yeah. And utilities are just so sleepy. I mean, having worked kind of adjacent to a utility for a number of years, the culture is just
it's got to be
shockingly slow.
It's close to working for the government, maybe. I don't know.
I don't know. I did like an internship for GM many years ago, and I was like shocked at the culture there. But utilities take it to a whole other level of kind of just slowness and laziness and all that.
Yeah.
But anyway, getting back to this Brookfield thing, I think one of the really interesting concepts is that you've got, I'm just thinking about it from Tesla's perspective. I'm almost certain they lost money sending all those crews to your house to manage that, solar install for,
I think so.
Almost a month.
So.
And if you look at their Q1 financials, they had an energy gross margin of around negative 10%, if I'm not mistaken, which was normally they were around flat. It was a big drop to negative in Q1. And I think issues like this in trying to ramp up Solar Roof was probably one of the big drivers. So I think the idea of kind of pre-installing this on new homes where you don't have to deal with kind of homeowners, you're doing all the interconnect work anyways, because you're already kind of adding to the grid. So if you can kind of manage all that work right up front, and you've got one crew that's kind of going from house right next door, and maybe you can knock out, I don't remember how big this development was, but if you can knock out 100 solar roofs in 1 week, or not in 1 week, but kind of all in one go, your crews are going to be much more efficient. There'll be much less kind of downtime. You're not going to be interrupting anyone's life, so you don't need to kind of worry about that since the homes aren't occupied. So I think this kind of approach of focusing on new build rather than retrofit for Solar Roof, I think that's going to be a really good proposition for Tesla, and especially for their margins. So Tesla Energy is still really small right now, but I'm super bullish on Solar Roof in particular. I'm kind of excited to see if they can scale this up to other areas.
Yeah, absolutely. Yeah, I mean, I think just a slower ramp up than everyone thought, and eventually it seems like a no-brainer that it's going to be mass produced, mass adopted. Everyone in my neighborhood loves my roof, and they ask me about it all the time. Want to get it? I'm like, oh, it's a long waiting list. And like, I don't know,
Do most
maybe not.
people know what it is just from looking at it? Like the average person who's not a Tesla nerd like us?
No, only the people that ask about it. Like then I tell them, but now it's dirty. It's gotten enough dust on it where it doesn't look too differentiated. I think once it rains again here in Northern California and it cleans off the dust, it'll look really nice again. But right now, it's kind of collected enough like dust where it doesn't look so different. Where people don't stop and see it looks like a different roof, like it did for the first few weeks or month or something. But we'll see after it rains and how it looks if some people are kind of like asking about it again.
Yeah. Why don't we go to some more of the questions that are coming in?
Okay.
Have you heard of Kubient? That's one I don't know. I haven't heard of that one. KBNT.
KBNT. No, I haven't heard of that one either. Is it a small cap? Let me pull it up here in my ticker here. Kubient Inc. Yeah, it's like a 68 million market. Yeah, I haven't heard of that. It's really micro cap stock, it looks like.
Yeah, that might go to one of the other questions a little bit further down.
Yep.
How do you go about identifying new good soil companies to research, and how do you conclude you've found an opportunity? What are your
That's
thoughts?
a tough one.
You started the fund with a
Yeah.
handful of names, and I think we try to be really focused on a small number of names. I think it's probably fair to say that we have more ideas than I would say positions in the portfolio for them. But how do you go about kind of waiting and identifying new opportunities?
Yeah, I mean, there's lots of great companies out there, lots of great opportunities, and we're not going to see most of them or take advantage of most of them. And so, start with what we know, Tesla, obviously, and we highly convicted in that. And then other things, we've really sort of developed our thesis on Roblox more or less. And we're paying close attention to that. I mean, it's not as certain to us as Tesla, but we just think there's a significant chance it becomes much bigger down the road, but this could be the apex of where Roblox will ever be right now too. That's very possible. So we're not betting the whole fund on that, for example, or, Lemonade is sort of like an insure tech play we've become aware of and studied. And I guess we just kind of keep our ears out and, whether it's social media, influential thinkers, I've mentioned before, I think on some of my past interviews, like the Motley Fool founders, for example, they've had a lot of incredible picks over the decades. Kathy Wood and ARK Investment, that team has had some profound picks, obviously. And so when people like that talk up a stock, and when I'm talking about the Motley Fool founders, I talk about the founders. Like the Motley Fool is a big organization, and there's lots of people making picks within that organization. But I think the Gardner brothers, that's kind of who I look towards specifically. And if one or both of them are talking about a particular name, then I put more weighting in my own head to kind of like, okay, let me pay attention to that. And then if Kathy Wood and her team are talking up a name and it's the same name, for example, then I'm like, wow, that's a really bullish flag for me to research that company more, so there's people like that. And I find other influential people that I think are just seem to be wise and make good long-term picks. And then I try to focus my time on those types of companies more than companies people throw out on the YouTube chat thread, which could be a great company, but you really have to spend time researching it in order to understand it, obviously. And there's only so much time in a day. The genomic stocks, I know like the ARK team is big on genomics, and I've tried to look into it, listened to some interviews, for example, and I just can't grapple with it myself to be sure of it. I'd want to test out the product there's no way for me to test out a lot of this stuff. Maybe I'm wrong, but a lot of it's like theoretical or just in lab proven stuff or, studies that are being done right now. And, so, it's a mix of things. It doesn't really answer the question. I don't know. It's just, there's so much information. It's hard to find that the right things, pick the right things. What do you think, Matt?
Yeah. I mean, I think you and I are both, I would say, inherently curious about new things. So, I think we're always kind of listening to obscure podcasts or just kind of alternative sources of information, which I think in many cases are probably more reliable than just what you'd see in your average, Wall Street Journal or New York Times article. But because you're
For
kind of
sure.
going to the source or going to some citizen journalist who knows a lot about one particular thing and are just kind of reporting it the way they are. So I think we, at least in my experience, have just found some ideas that way. And so a thought or an investment idea just starts to percolate, and then you just naturally dig into it more. And as your conviction builds, then maybe we'll kind of pitch a small position within the fund, and as our conviction builds even more, I think our weightings, which vary quite drastically within the fund, but they reflect our conviction in our thesis.
Yes.
So obviously, Tesla's the highest conviction, and it's by far the highest weight. So I think that's kind of the way it goes. I mean, you and I talk about these ideas on a regular basis, and I think as we get more comfortable with them, we're comfortable committing a little bit more capital to them too, or a higher weighting, I should say.
Yeah, absolutely. That's sort of a good way to describe it. We kind of dabble in it at first, and as we dabble in it, we kind of naturally become more curious because we have money invested in it too, and then we kind of study it more, and sometimes we invest more and sometimes we don't, and leave it as is or close out the position. I mean, a long time ago there was a position I mentioned, I think end of February in the fund. I was like fascinated by this online sports betting thing. I remember I bought like Fubo, Fubo. It was towards the end of last year sometime, and it was like a hot name. Everyone's talking about it. And I was like researching. I was like, oh, this is like a perfect combination. And then I bought some shares in the fund at the time. And this is before we started taking on outside investors. It was really just trying to get the track record going still with my own money. And after like a week or two, like I studied it more, and then I watched a short thesis about it. And I was like, I don't think this is like they're going to be a winning. I think there's a concept that's great and will take off, but I'm not sure this company's going to execute on that concept. And I sold it, and I sold it for like a 5 or 10% profit because the stock was being really hyped up, and it just was a mistake I made. But I made a mistake, and I feel like, and I was able to get out of it at a profitable. It's rare to get out of a mistake in a profitable way. But we've made lots of mistakes where we lose out, and like options bets, for example, that instead of just buying the stock, we made option bets. But it's okay to change our mind if we research it further. Is basically what I'm saying. Like that's part of the process too. Is like you have an idea, you want to study it more, you feel pretty sure, and then change your mind.
And we always want to know. I mean, if we're wrong, we want to seek kind of that alternative point of view. So. We're always listening to earnings calls and kind of, analyst questions on those, and reading the bull and the bear case, and kind of coming to our own conclusions on what we think is likely to happen. So that's one, like with Bloom in particular. It's just a company I really hate.
I'm really.
I've been digging more and more into it. Kind of the more I dig into them, the more I'm convinced that they're just drastically overvalued. So it's just I think it's a slow process, because you're not gonna read one article and know everything about a company. It takes a lot of time and grit and research over time to really get that conviction.
Yeah, it does. Yeah. Kind of wish we went more heavy on the Bloom Energy. Sure, at this point,
it's doing well so far.
It's doing well. Yeah, it's doing well. Yeah, I wish we went bigger.
Got in at 27. We dabbled earlier and made it profitable, but that was very small. That was just a really small test. And
it was a test position, 27, like you said, and then we got more convicted on it. Yeah.
So here's a question: do you guys see a surprise print this upcoming report regarding Tesla Energy? I don't. I did a whole series of videos on Tesla Energy back when I was doing Spark Spread. I think they certainly will continue to grow. The revenue absolutely will grow. Their solar roof deployments will increase. Their battery deployments. They had some, I forget which one it was, but they had some very large battery installation this quarter as well. So that should drive revenue quite a bit this quarter, I think. But I think the thing to keep in mind is that the margin right now is just so small, and even if it was high margin, the actual revenue base is so small relative to auto, that it's going to take time for this to really become a value adder for Tesla. So yeah, in my mind, I want to kind of watch it to see how it's stacking up in the long term. I think it will be a big value driver in the long term, but it's not. I just think it's frankly not that material. It's not going to move the stock. It's not going to really change anyone's perceptions. Even if they beat revenue by like 10% and their earnings was positive 5% rather than negative 5%, both would be huge beats, but it's not going to do much for earnings.
Yeah, I agree. I mean, I think the energy is more longer term. What I would be interested in, I know they're trying to dedicate most of their batteries towards the cars right now, and only the power walls for people that also order solar. But it'd be curious if they offered the power walls at like double the price with expedited shipping and expedited installation, how successful that could be potentially. Like if they said, okay, if you want to pay double the price for the power walls, we can install it within a month at your house, just alone without solar. And I bet there'd be a big taking for that, like especially in California with this fire season coming and all that. I bet a lot of people would overpay for that.
Yeah, I bet you're right. I mean, that's something that I imagine. There's this sense I get, I listen to a lot of kind of energy podcasts and news on that. And I think there's a growing sense within the energy community that the grid is going to become more and more intermittent, especially in the western part of the United States. But you've got, more intermittent resources with solar and wind. You've got aging transmission and distribution infrastructure. And you've got closure of some of the baseload plants, both nuclear and coal, that used to be providing a big chunk of the reserve. So you just have the situation now where wildfires are bringing down lines. You've got higher demand because temperatures are getting higher, and then you've got less reliable load or generation than we used to have. So
yeah,
I think people tend to think progress is just kind of slow and steady, and with the grid that it should eventually get better and better. But if you look at the individual factors going on right now, I think there's going to be a trend of decreasing reliability among the grid, especially in California, especially in the West. And that should lead, I would think, to a lot more demand for for backup home batteries and solar and things that Tesla can really benefit from.
Yeah, and what they're doing in California a lot actually is they are PG&E is like proactively, as a safety measure, shutting down the grid when it's like forecasted to be windy and dry and hot, which is like every other weekend probably going forward. So they're like proactively shutting down the grid in certain areas to prevent fire. If the wind blows over power lines, it wouldn't cause a fire. You know what I mean? So
yeah.
Because of that extra proaction, they're kind of being put pressure. There's a lot of pressure on them to do that because they're at the center of a lot of lawsuits of a lot of these fires from recent years. That also really hurts people because there's rolling blackouts or people just losing power even though there's no fires yet, and everyone's upset. And if you have the power walls and solar, you're like, all right, I'm fine anyway. But without that, you're kind of like at the mercy of what PG&E decides to do.
Yeah, that's it's gonna be interesting to watch. I mean, they've got pretty significant financial issues right now. I'm curious to see. They brought in this new CEO, actually, Patty Poppy. She was from a company I used to work for, CMS. I think she was a great CEO, but she's kind of inherited a mess there. So I'm very curious to see how she handles that, because I don't think there's any
people who aren't
clean answers.
From the and for people who aren't from the U.S. or aren't familiar with PG&E, stands for Pacific Gas and Electric. It's like the largest utility on the west coast of the United States and serves, I think, correct me if I'm wrong, but I think it serves most of California or all of California. It's like the major utility here. So that's what when we say PG&E, it's a lot of people in the U.S. know about it.
Yeah. Let's look through some more of these. FSD, we already kind of talked about. What do you think about NIO and some of the other kind of emerging small EV companies?
I mean, I've always had my eye on. I think XPeng have always been the most. I don't have anything to base it on I don't have any like, there's some citizen journalists in China that I kind of follow but no one's like I'm personally in touch with per se, or no one's written like big research reports on the Tesla China EV space and who's going to be second place or who's going to win it. I think Tesla is in the driver's seat in China right now with their quality and how much they sell. I don't understand the Chinese government enough to be confident that that's going to be the future forever, even if Tesla has the best product. But if there's another player after Tesla that takes over as the dominant player, or whether it's that or just second place to Tesla, even if it's just in second place, but still meaningful. I do like XPeng, NIO maybe, but the fact that they've gone on just, they're kind of they're set on the battery swapping idea, to me is a big signal that, whoever's making the decisions at NIO is not realistic. I just don't think the battery swapping is realistic. It sounds good, but I don't think it works well. And XPeng, they're not doing that, but I think they're kind of following Tesla's footsteps in a lot of ways. And, their cars seem pretty legitimate, just like NIO's cars. And I think they were first to export to Norway, for example, before any of the other Chinese EVs. And they're trying to get an international game. So I do like XPeng, but I don't have a position in anything right now, but I just follow them. But yeah, what are your thoughts, Matt?
Yeah, I think somewhat similar. The Chinese government, I think, is always going to favor, NIO and XPeng and those kind of national brands more than they will Tesla. So I think they certainly rolled out the red carpet for Tesla to get them over there. But I wouldn't be surprised if that slowly becomes a little bit more icy over time. But you see a lot of the Tesla Cube kind of thinking that the Chinese government's going to nationalize that Shanghai plant and like steal all Tesla's IP, and I'm sure they'll steal a lot of it. But I think like with the neural net in particular, that's not the sort of thing that you can just like steal the hard. I guess you could somehow steal that, but I don't think that's likely. It's a secret sauce and in perception and in anticipation of, I forget where, not anticipation, but decision making of what needs to be done, and that's not something that you can just steal, like the design for some Boeing 747 engine. So yeah. I don't know. I think there's room for a lot of winners. Rivian I like too. I think there's a place for kind of like the electric, kind of Jeep for the more sporty folks. And I think they'll do well. They've got this backing from Amazon and Bezos and Musk, love kind of fighting it, duking it out with each other. But they've got legitimate order flow. What was it, 100,000 delivery vehicles, I think. So that's great. I think we're all winners when there's more EV players out there. So I think the real question is who among the legacy group is going to survive to make it, and that's not clear to me right now.
Yeah, I agree. Yeah, at some point, most of the legacy car companies will be a great short. I just don't know when that'll be and how fast that will monetize. Can Ford and GM kind of continue to go up on speculation that they're going to be a significant EV player? Or will one of them actually will Ford actually do successful EVs or GM do successful EVs long term? I don't know, but I think at some point, a lot of these companies that are legacy companies, Volkswagen, even throw in Mercedes, BMW, throw them all in there. Maybe one or two might survive through some consolidation or just get their act together enough to be relevant. But I think most of them, those stocks would be a great short at some point.
Yeah, both Ford and GM are, well, maybe not all-time highs for Ford, but GM certainly, is close to all-time highs right now.
Yeah, I've been watching that. I'm like thinking, like, man, I wonder when is the right time to short this thing. Because I've thought about it for years. I'm like, it's probably going to be a long, slow train wreck for these companies.
It could be, but at the same time, we're sort of free-forming a little bit here. We haven't talked about this before, but they've got almost, I should say over half of their balance sheet is really kind of like a bank, where they've got financing related to their lending arms. So I could imagine if margins come down, or if there's another recession and demand goes, or just if the trend to EVs accelerates and those companies just don't have a lot on offer, I could see it's a pretty fragile position that they're in. So it could be a little bit more of a quick downturn than
I hope that would be
maybe
nice
some
if
would
we could
expect.
spot that. Yeah, we could spot that.
Yeah,
Get some puts
let's dig
and
into that one.
we'll dig into that one. We'll do that on our next chat. Maybe, me and you will talk about it. Maybe if people want us to talk about it on the live stream, we can too. But yeah, we'll have to look at those implied volatility on those puts. Probably are pretty low, so it might be a good time one of these days to do something like that.
Yeah, I think so. Well, we're bumping up against an hour here. Do you want to take any of the last couple questions or comments, or anything else you want to say before we sign off?
No, I mean, I think we'll try to keep this at an hour. We'll try to do it every Tuesday going forward. Hopefully, we'll get some regular people tuning in and regular questions we can answer, and try to keep the outline similar and macro market, maybe some Tesla stuff, maybe some other things. And we'll try to get it up on maybe Twitter Spaces and Clubhouse at the same time, if that's possible, and improve our reach. And I think next week we were talking about maybe going over some of the details of your modeling for the Tesla earnings coming up, right?
Yeah. So I'll probably end up posting my my Q2 earnings estimate this week sometime, and we got Tesla announced the date. Was it it's last Wednesday in July? I think I forget what date it is.
No, I think it's a Monday this year.
Oh, it's a Monday.
The 26th. Yeah,
Monday the 26th. Okay. So yeah, we'll go over that that next week. I've been doing these Tesla EPS estimates for a while now, and I'd love to kind of go over the model and what I'm seeing and expecting. And I think the big thing to watch this coming quarter is going to be that gross margin. Tesla's raised prices a couple times in Q2, and I think the big question is how much of that is just related to kind of passing on commodity price increases. Versus how much of that is we've seen just tremendous demand. I mean, they're nearly sold out for Q3 already, and it's just started. So I think there's a reasonable case to be made that they just can't keep up with demand, at least kind of in North America and Europe. So that's going to be something I'm going to spend a little bit more time this week thinking about before I publish my model. But I'll put that out on Twitter sometime this week, and then we'll talk about it next Tuesday.
Great. Yeah, sounds good.
All right. Well, thanks for watching, everyone. And we'll be back here next Tuesday.